We got two of Canada's big lenders reporting an earnings beat. It's been a pretty decent earnings season for those giant Canadian banks. National Bank coming up with a marginal disappointment. So let's start off with Canadian Imperial Bank of Commerce. That stock has gone to record highs over the past few days. It's probably in record high territory again today. We're joined by Ryan Bushell, CEO and Portfolio Manager at Newhaven Asset Management. Great to see you, Ryan.
Thanks for having me, Andy.
Start off with CIBC. Did anything jump out for you there?
No, it's just a continuation of what's been really solid results for CIBC for some time now. The management change to Victor Dodig was I think a key turning point for the company in terms of rebuilding the brand, and it's just been very steady since then. So not surprised to see that, and happy owners of that company, and think it's there's more ahead, I think, for CIBC.
They have less in terms of exposure to the United States, relatively speaking.
Correct, and so that's the other side of the coin, right? Is that there is some risk if you are more negative on the Canadian housing market, which we do have concerns over. You are going to be, CIBC is going to be at least treated as the Canadian bank these days, but under the surface for CIBC, the underlying operating results have been really, really solid, especially on credit. So, I think the company is well positioned, and we are very cautious on the current environment and cautious on the Canadian banks as a whole. We are underweight, but we are still happy owners of the companies, and this is why, because they do put up good earnings.
So you're a little underweight. Of course, they have a massive weighting in the market, and you're slightly below that level.
Exactly. Yeah, we are more geared towards the power demand, electrification of North America theme. So that has come at the expense of financials.
We're going to get some of your ideas in that area. Turn to TD Bank, if you would, please, because the previous record for this stock was back in 2022, according to my screen, at just under $108. So we're pretty darn close to that now.
Yeah, so it's been a nice comeback for TD. We had a nice opportunity to buy a bunch of stock in the high 70s and low 80s there during the AML worries.
Oh, so you went in?
We did. We always have money coming in. We always have money to be reinvested, right? We have dividends coming off of current accounts that need to be reinvested. We're constantly rebalancing accounts. So when you get a big fall down in one of our core holdings, which TD is, we were adding across the board. We didn't expect it to turn around this quickly. There are still issues in the U.S. in terms of their allowed growth, and they are still restructuring their management team. You saw that in the expenses this quarter. But the stock market generally is rewarding these financials right now. Again, I am wondering if this is a bit premature. I think that especially in Canada, the credit cycle has yet to intensify in terms of the mortgage side of things. That should be kind of end of this year and into next year. So, again, we're happy owners. We're not adding at these levels. But again, we'll take the results when they come. You can't sort of determine when things are going to perform.
I mean, we've heard about the collapse of the condo market in Toronto. And these banks are very diversified, I know, but that's got to put some borrowers under pressure.
It will, and what we think is more the knock-on effect. So if you look at condo construction and the amount of people employed in high-rise building construction, that is set to really slow down or potentially stop as we head into 2026 and 27. So that has knock-on effects of all those people and supporting their families and the borrowing that they've done. And so, again, the Canadian banks have the highest slice of the credit. Meaning they have the highest quality credit. So they typically do okay through credit downturns. However, again, I don't think it's an all clear either. And the share prices are getting up towards kind of the top end of the multiple range. But as you see, NVIDIA this morning, $4.4 trillion, $4.5 trillion company this morning. The entire TSX is only $4.9 trillion. And I'm not even sure if that's Canadian dollars versus US, so it might even be very similar. Right. It's hard to tell what anything is worth fundamentally. So again, this is why we try to be conservative for clients. We are dealing with their life savings. However, we need to remain invested because
that's tough,
there are just factors out there that are happening on the bigger macro picture that are driving money towards assets.
We're tight for time, but you have some stock ideas for us. Northland Power, huge, among other things, in wind in Europe. Why do you like the look of this one?
Again, it's not so much it's not all happy news. They've underperformed on wind resource for quite some time, but they do have some projects coming online that they're delivering to contracted customers. How those projects will perform for those customers, I think, is a different question. But for Northland Power's part, they've been hired to build and develop them, and that's what they're good at. And they're close to finishing off those projects coming up in sort of 27 and 20. Close in our terms, not close for the market. So that's why the market is yet to reward them. But for us, we look out a couple of years and we see a lot of cash flow coming on for this company, similar to the build cycle they went on kind of 2017, 2018. So we think that that's a positive for the company, and it has a nice yield while you wait. And that's why we're liking it here.
Right. Yeah, that's the one thing with these energy companies, dividends can be because, as you say, they have contracted customers looking at a yield on NPI of about 5.3%.
Exactly.
BCE, the parent of this network, you see value in the stock?
Yeah, and again, this is, if you look at how TD has come back, right, after being persona non grata for a while, BCE is in that boat. I think they're circling the wagons with their institutional investor base. And now with the dividend right size, they can pay down some debt as the years go by. And it seems that wireless pricing in Canada is starting to turn. So we like it just on the basis that, again, you're collecting a nearly 5% yield while you wait.
My screen's showing 5.1%,
right, exactly.
But the calculation's different.
No,
go ahead.
Yeah, exactly, 5%. And again, when these big companies start to turn around and they're somewhat large index weights, when people start to get behind them again, they can run quite a ways, i.e. Manulife, i.e. TD. So they can go further than you think.
Thanks, Ryan. And BC, just once again, the parent network, the parent of this network, Ryan Bushell, joining us there, CEO and Portfolio Manager at Newhaven Asset Management.